Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, May 31st, 2011 is brought to you by Realtic. All right, guys, we have a fair amount to cover today. The markets gapped sharply higher today, which enabled us to unload a majority of our long positions. For those of you that are members of the Research Center or chat room at In the Money Stocks, you know we basically accumulated a bunch of long positions mid last week, early last week, going into the later half of last week and into today, based on the hypothesis the market would float higher into the holiday weekend and then holiday volume would start it out higher this morning. That played out perfectly. I made money on LDK. Let's touch base on these. LDK last week, the buy was alerted at $6.45 right down here. The stock has moved all the way to a high today of $7.75. That is a huge percentage gain, over 20% off the lows. In addition, WFR, take a look at this one. This one, we bought it at $9.90 and unloaded it today at $10.60. 1 penny off the high of the day today. That was a beautiful sell, and again, another big winner. In addition, Goldman Sachs, folks, Goldman Sachs, we picked this up at $135.85 and unloaded it today just around the 142 level, folks. Basically a $5 gain or so, $5 plus gain, I should say, on Goldman Sachs here in the Research Center and Intraday Stock Chat. So the profits continue to pile in. Many players in the Intraday Stock Chat and Research Center are having their best day ever because of these massive moves up. And again, the key was to sell into the gap up this morning on the third day up in a row. And if we go back to the SPY here, folks, you can clearly see this. Take a look at this. If I zoom out on the charts just a little bit, going back to last Thursday, Thursday was a nice reversal day. Friday was up, and then today you had the big gap up. You basically went from the 131-ish area all the way to 135 today, and that is a 3-day bar surge, and that's what you sell into. So congratulations to those of you out there. What I want to do now is get into a little bit more of the analysis side to give you guys all a sense of what's going on. First off, if we zoom into today, the gap up today occurred just underneath the 135 level. There's a key resistance line right here. Notice how the first line of the day, on the first candle, it closed below. So you just closed slightly below that level. That tells you it's a little bit of bearish. Also, you have a little bit of a topping tail right there, which is also an indicator. And the markets do start to fade. Now, you fade beautifully here for a certain amount of candles, at which point you go sideways with a small bounce. That creates a bear flag pattern. Then you go a little bit lower, kissing the 50 moving average, but basically staying right around the blue trend line as well here, and then ultimately floating up. Volume has disintegrated, folks. This is the general thesis of a trading day after a holiday weekend. Volume is usually very, very light, and you can see this afternoon especially. It was decent this morning on the selling. There were a lot of players that had the same idea like us, and if you didn't, if you weren't long here going into the holiday weekend from last week and you didn't make money and you're with any other service out there, I strongly recommend you reconsider and join In the Money Stocks. We have a 7-day free trial. You can try it out. People that tried it out over the last week, I can only imagine they probably made a lifetime supply to pay for the Research Center and the chat room just based on the trades that were out there from last week into today. It is truly astounding. In any case, nice pop here on the spiders coming in the current time frame. You'll have a little resistance at the 20 moving average. If you get through that, you could float up words of this little pivot high and maybe even float up a little bit higher. Now, the reason why the dollar or the markets gapped up today was because the dollar had a sharp move down. All right, dollar gaps down, market gaps up. Remember, it's inverse. Now, as the dollar has traded today, it has floated neutral to higher, which has taken the markets down a little bit. But there's also some concerns. I mean, the economic data out there is not good, folks. Greece may have a new bailout package in the works, an aid package. But any way you look at it, the economic news that's been coming out in the U.S. or globally is not good. And there's a lot of instability in Yemen now and a couple areas in the Middle East starting up again. And that's keeping oil prices up a little bit on the day. If you take a look at the USO, it's up still 63 cents today. Spot crude is actually up about $1.50 at $102 per barrel. Gold and silver are essentially on the flat lines. The SLV is up 20 cents and the GLD is down 15 cents. But those are right around the even number. It's really oil that's seeing an advance, and I do push the advance on oil to really essentially what's going on in the Middle East. A little bit of a bubble up over the weekend, in my opinion, from what we saw. In addition, solar stocks are having a big day today. FSLR, it is well off the highs. You can see this, but the LDK and the WFR were two plays that I played personally. WFR, take a look at this, guys. WFR, this was the big surge early. I sold right here, literally 1 penny from the top, took profits, and that was a lucky thing. As you can see, that thing come all the way back in. LDK is still having a decent day. It's off the highs, but again, good job for those of you that unloaded that today. And those are both solar plays. And solars are hot because Germany over the weekend basically came out and said, hey, listen, we're not going to have nuclear energy anymore. By the year 2022, we are going to do away with solar energy. Therefore, not solar energy, nuclear energy, they're going to do away with by the year 2022. Therefore, what you're going to see is probably more demand out of Germany for solar to make up that deficit, as well as maybe even a little bit of oil will subsidize that as well. But again, basically off of what happened in Japan, you're seeing a lot of these countries rethink nuclear energy, and I don't blame them. I mean, it's a disaster of epic proportions. When you saw radiation as far away as New York or Florida and stuff like that from Japan, it has a global impact, and just imagine how bad it is right in that general area of that nuclear plant in Japan. It is horrific, and our hearts will obviously go out to everyone affected by this type of thing. But it does make you rethink the nuclear energy option. There's no other way to do it. Having said that, there are some small cap plays that I'm watching here this afternoon. ENER is one of them. This stock has been beaten down. It has some ugly price targets on it, but it's low enough where it does get interesting when solar starts to uptick, as well as ASTI. ASTI dead lows as well. It's another solar stock called Accent Solar Technologies. Those two are on my watch list. In addition, you can take a look at some other key plays here. Alternate energies continue to be pretty strong. One stock that's doing a little on the weaker side today is Research in Motion, although it's still holding this base little level of support. If I zoom out, you can see the little bit of a support line here at 42.50. If it closes below 42.50, this stock is probably going for $40. So just be aware that that's really your exit strategy on the stock, and I warn you to be very, very careful if that does get below 42.50, as it could drop quickly to below $40 per share. All right, so that's one of the weaker stocks out there. In regards to everything else, the markets are higher today, even though we are off the highs of the day. Dow is still up 58 points, Nasdaq's up 18, S&P's up 6, so it's still a solid day of about 0.5% gain on the indexes. Some key leaders today that are performing pretty well. We have Apple Computer. Let's take a look at Apple. Apple's up about $6. Now, Apple actually gapped above the 20 moving average today and has moved above the 50. That could be a river theory, which tells us it could actually trade up a little bit more, maybe as high as this area in the coming days. So watch that very closely. But Apple having a monstrous or decent day. I should say it's a decent day, not a monstrous day. Percentage-wise, Apple's up about just under 2%. All right. Goldman Sachs, we touched on this one. I made a lot of money on Goldman, a lot of money on the other plays that I touched on earlier, and Goldman Sachs continues to be off the highs, but still up on the day. JP Morgan is up only 6 cents. That's coming off the highs as well, but still positive. And Amazon.com is still trading up $1.70 on the day here, trading after it pierced the 20 moving average. See the 20 moving average right there? Look at that nice little pullback off the 20. All right, so again, overall things are positive, but off their highs. That's the general synopsis. The reason why we're seeing that things off their highs, the dollar has slowly advanced off the lows of the day. In addition, the economic data that we got today was nothing to write home about. It was not good. The jobs report is coming on Friday. That's going to be a little bit of a concern to many investors out there into Friday. I think you'll see 150 to 200,000 jobs, but that's not enough job creation to really affect the unemployment rate. It's not like you're going to see a major drop in the unemployment rate, and people are realizing that. Remember, the QE2 is coming. The Fed printing of money is coming to a close. That is, something that has to be on the market's mind based on the fact that it's been a drug to the market, and once you take drugs away from an addict, you generally see some negative effects. That's our thought process as well, although I think the Fed will try to do some sort of QE3 policy, although they won't call it that, obviously. They'll have something in order, to get people to at least buy into it so it's not so unpopular. All right. The debt ceiling is another issue in the market. I mean, there are just a lot of things in the worrying portions of the market's mind right now, and I think we have to be aware of that. So the key is to keep it short term, like we're doing here at In the Money Stocks. You want to take the 7-day free trial of the Research Center and of the chat room. I strongly encourage it. It's no risk to you. You can just cancel before the end of the free trial, and you'll of course never be charged. And that's really the key. What it comes down to, understanding it's a short-term market like we are. We're banking out 15, 10, 20% moves in a matter of 1 week, and then we move right back into cash and look for the opposite move on the short side after we went long, and vice versa. You just want to rinse and repeat. All right, guys, come join the Research Center. Come join the intraday stock chat. I'll be in there in both this afternoon and all day this week. And again, enjoy. Take care. See you soon.